Good evening, everyone. What I'll do is I'll briefly talk about Contra Fund and the philosophy that I operated with, and why this philosophy can be particularly apt at this juncture. Uh, Now, when you really think about contrarian philosophy, what are we essentially talking about? We are talking about either stocks or sectors or themes that have not been in favor for a while, and essentially the hope is, if you carefully choose a set of companies from this particular bucket, the returns going forward can be quite attractive. That is in some sense a very simple line of thinking, right? Matlab, jo bhi companies the market has sort of given up on, saying that yaar isme to kuch maza nahi hai, it's kind of boring, and even this team, it just doesn't work, so I don't want to do anything with it. The point is that in some of these companies, I wouldn't say all the companies that will fit into this criteria, but some of the companies can deliver very good returns going forward, and that is the process that I operate with. Now, why is this so important at this point? Why do I feel that, yeah, matlab, why is the current movement so interesting? If you look at, actually, Gaurav has covered a lot of the underlying concepts quite well in his presentation. But the way I think about it is, when you think about the economy, right, and companies, effectively there are two broad categories of companies. Companies that follow a very well defined economic cycle. So these are like quite cyclical in nature. So when the economy is doing well, these companies will show very good earnings growth. But the flip side of that is that when the economy is not doing well, then these companies can show very muted earnings growth, or in many cases also very significant earnings decline. And so this is essentially the cyclical basket, so to speak. And then the other basket is basically the sort of what they call as the secular compounders, where now I personally believe that every company inherently goes through some cycle, but what we can agree on is that the companies that fall into the so-called secular compounder category tend to be less cyclical, which means that अगर economy अच्छा चल रहा है, तो then they will report probably a good earnings growth. But even if the economy is not doing so well, the earnings growth will probably be lower, but still, for the most part, these companies are going to report positive earnings growth, right? And when you think about which are the normal sectors or themes that one can think of to put in the so-called secular compounding category, the most obvious one would be the consumer-facing companies. क्योंकि particularly in a country like India, with its demography being sort of very favorably poised, you know that यार मतलब जो भी हो, मतलब like the usage of lot of the household consumer goods, वो तो चलते ही रहेगा. मतलब इकोनॉमी ऊपर जाए नीचे जाए, it's not really going to matter, right? At the end of the day, you're going to use a toothpaste, you're going to use soap, the standard household items, you are just going to keep doing that, and the economy doesn't matter. And so what has happened is that over the last 10 years, the economy has been in a big funk. When I say funk, it's been in this sort of slump-like situation, which really mimics where we were back in the 90s. If you go back 20 years, and I also look at the previous decade, so the period from 1990 to 2000, particularly the mid 90s to 2000, it again had, there are a lot of similarities between that period and what we've seen over the last 7 to 10 years, which is that the cyclical basket that I spoke of, right? These sectors just didn't grow because you had sort of excess capacity to start with. There was sort of excess competition, and the economy from a very macro top-down perspective was essentially heading towards a slowdown. So these companies ended up in a very bad situation. A lot of companies went into bankruptcy. So when you talk about corporate-facing banks, again, go back to the mid to late 90s, you had a very similar situation. Corporate NPAs just exploded. So when you look at the public sector banks in that period, अगर उनका आप वो NPA chart देखोगे, it looks very similar to what we have witnessed over the last 7 years. And the underlying thought process, or the underlying mechanics, is pretty much the same. That when the economy is not doing well, when the cyclical sectors are essentially facing headwinds as opposed to tailwinds, a lot of companies in that space get into trouble. Then the banks or the financial institutions that lend to these companies, they get into trouble. And when these financial institutions get into trouble, all the more the risk appetite comes down, because now they don't want to really give out a lot of new loans, and that creates its own sort of ripple effects in terms of the economy slowing down further. This is exactly the situation that happened in the mid to late 90s. This is exactly the situation that we've seen over the last 7 to 10 years. Now, तो तभी अगर आप जाओगे and you look at the market in that period, because ultimately we don't really, frankly speaking, as investors, we don't care about the economy, right? We only care about stocks, because at the end of the day, we are investing for returns. But there is a big linkage, and so when you look at the stock market, you can see that जो consumer facing companies they continue to do well. From the mid 90s, thanks to the dot-com boom, Y2K issue, and so on, all the technology-based companies, they also started doing well. So these two were considered sort of, compounding machines. मतलब like इसमें तो slowdown कभी आना ही नहीं है. Earnings growth is just going to keep going higher and higher and higher. So what started off as a very right line of thinking, in my opinion, went too far. Where people then towards the end started saying that, यार valuation क्या देखना है, मतलब these companies are going to keep growing, right? So ultimately valuations अभी ज्यादा है तो भी चलेगा, मतलब बाद में the earnings growth will automatically take care of valuations and so on. And it reached a point where people just stopped having discussions on what is the fair valuation of such a company. A lot of these companies started trading at ridiculous sort of valuations. Meanwhile, when you think about the other extreme, these so-called old economy sectors, the sectors that need high capex, a lot of like high fixed cost base. Think about steel, think about cement, think about real estate, and so on. These companies in these sectors, nobody wanted to touch, saying that यार इसमें तो कुछ मजा ही नहीं है, मतलब there is no earnings growth, a lot of companies are getting into trouble, so people completely shied away from that. And then towards the 99 2000 period, actually the 99 to 2002 period, what you saw was a classic bottoming out process of the economy, where वो मैक्रो में बोलते हैं ना कि हमेशा एक ऑटो करेक्शन एस्पेक्ट आता है. If something, a lot of the cycles, they always swing from one end to the other. And by the time we arrived in 2001 2002, the lot of the companies in these cyclical sectors had reached a point where their cost base became very favorable. Competitive intensity became low because the guys who are remaining, they like a lot of guys were wiped out by that period, right? And so the guys who were remaining, they had a cleaner sort of field to operate in. And then because there is this pent up demand that comes in, अगर आप काफी टाइम से स्टील प्लांट खड़े नहीं किए हो, अगर आप काफी टाइम से सीमेंट प्लांट खड़े नहीं किए हो, when you think about a lot of these sort of high capex sectors, eventually India में there is always this कुछ तो एक ग्रोथ तो होता ही है ना हर ईयर because of the demographics. Eventually the utilization in these sectors reaches a point where suddenly these companies start essentially showing pricing power. जो पहले कभी उनको pricing power मिलता ही नहीं था, all of a sudden you see that यार ये तो अच्छा है, like I can increase prices by 10% and it's easily getting absorbed. And that is because one, competition is less, and two, the demand has reached a point where the buyers have no option but to take it from us, and that starts this nice favorable cycle which then goes on for several years. Why do I say all this? Why do I even talk about the 90s? My point is, what we are witnessing now is in many ways very similar to what we witnessed in the late 90s, which is that lot of the so-called old economy sectors where people practically gave up on these companies, they are making a roaring comeback. In fact, when you look at the pricing situation, right, in many of these sectors now, they are able to dictate prices. That is telling you something, that at the end of the day, there is sort of enough pricing power available in many of these sectors. In certain sectors, if it hasn't reached there yet, most probably in a year or two, you're essentially going to reach there. And when that happens, you are going to have again a very favorable cycle. And so मेरा in some sense then एकदम simple line of thinking हो जाता है कि whatever was forgotten over the last decade most probably is really going to come back in vogue the next decade. And the flip side of that assertion or that thesis is that these so-called secular compounders, while a lot of these are very good companies with very good management, nothing against the companies. But what has happened is that over the last 10 years, many of these companies have been bid up to ridiculous valuations. And then what happens is that let's assume these companies still they'll probably keep growing. Let's assume in the sort of low teens, even let's call it 15% range. What will happen is that eventually, as the economic growth becomes more broad-based, I suspect investors are going to ask this question: why do I pay 60 times, 70 times earnings for a 15% earnings growth company when I can get that same 15% or in many cases maybe even higher? Because as I said, when the cycle turns, the earnings growth is always going to surprise people. We've already seen that with steel companies right now, right? I mean, even I've been completely taken aback by the explosion in profits of these steel companies. And that is what happens when the cycle turns. It can be ferocious. So then people automatically will ask this question: Q, why should I pay 70 times, 60 times earnings for a 15% earnings growth company when I can get that same 15% or even higher earnings growth with a much lower valuation? And then on top of that, what also adds to the problem, so to speak, is that because most of us tend to be rear view looking to a large extent, we've been so conditioned by the last 10 years to only behave in a to only believe in a certain style, to only sort of be in a certain set of companies. And then so the ownership pattern at this point also is very skewed, where till a year ago essentially people, if you look at most folios, you will see that small caps became a very small part of the overall portfolio. Cyclical companies became a very small part of the overall portfolio. And people, and even people who were like holding on to these companies, got so frustrated that most probably like oh chhod do yaar karke, like many people would have just given up because the underperformance was so terrible, so horrid, that people sort of gave up on a lot of these companies, right? So then now from an ownership pattern perspective, most of the folios are very large cap heavy, they are very top heavy. So then what happens is, now if the other subset essentially starts showing much better earnings growth, then you're going to see a fantastic sort of swing of the pendulum to the other side, where earnings growth bhi acha dikha raha hai and ownership bhi utna hai nahi. So then the price move will be like very very strong in the other subset. What we've seen so far over the last 12 months is essentially the market signaling that we've hit some sort of long-term inflection point. What Gaurav showed, right? When you talk about corporate profitability as a percentage of GDP, that ratio has been sort of declining throughout the period from 2010, 2011 till 2020. Now, obviously, there is a floor below which it is not likely to go, right? And my suspicion is we've hit that kind of floor. So now the only way to go is up. And which are the companies that are going to show that? It's the companies that were not showing robust profit growth. More likely than not, those companies are the ones that are going to take this ratio higher. And that is why, in my opinion, more so than ever, having a contrarian bent of mind, having essentially this thinking that I'm not purely going to go on the basis of what has worked over the last 7-10 years. I think it is going to work very well. And I'm not talking about working well over the next 1 year. I'm talking about this philosophy or this concept inherently working well over the next 3 years, next 5 years, next 7 years. Because even now, there is this huge amount of disbelief in terms of the earnings growth that are being shown by some of these sort of old economy sectors. And in fact, Abito economy has been tanking further thanks to the two COVID waves. So all the more people are in the state of disbelief. But what you have to remember, ये second COVID wave के पहले अगर आप सिर्फ दिसंबर to February data देखते the economy was really in a position to roar back. That's why when you look at the Jan to March results of a lot of these companies, you can see that many of these companies have shown very good sort of earnings growth. Abhi, when you look at these corporate banks, right? Like SBI, PSU banks, like nobody even want to touch. Chhod do yaar, what's the point? But even these institutions, which are like not the most nimble institutions in some sense, they are also beginning to show that, boss, when the economy improves, the improvement in profits is going to be dramatic. And yes, abhi second COVID wave hua to wapas maybe there will be some sort of slump. But what you've seen after the first COVID wave, in terms of how the economy in general is resilient enough to bounce back, and what that means for some of these companies. The nice part is, a last decade has been so frustrating for so many of these companies, right? जो भी problems होने थे, they've seen it all, boss. मतलब जितना मतलब like when you take a very simple example, right, in the corporate space, जितना भी fraud, bad sort of like companies getting into trouble, जो भी होना था, like in some sense we've seen it all. Beyond a certain point, you run out of loans that can sort of like really go NPA on a significant scale. Now, on the retail side, it might be a different story, but I'm just talking about the corporate side. We've essentially, in my opinion, seen the worst of the corporate crisis, right? And so the bottom line is this, that whatever has not worked in the last 10 years, in my opinion, chances are very high that this is going to work over the next 10 years. But again, this is not like something ki matlab jo bhi aisa kuch bhi khareed lo. Obviously, you have to do your due diligence in terms of which companies you want to focus on. But broadly speaking, I just want to stop by saying that if ever there was a time to embrace contrarian thinking, to embrace a contrarian investment philosophy, I think it is now. So that's essentially how I think about it.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.